And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to Coach's Playbook for Tuesday, September 7th, the day after Labor Day. Hope everyone had a lovely weekend, long weekend if you're in the United States. Today, we're doing one of our favorite topics that we talked about once a year, but there's always new information, which is that classic fall volatility. I got out the Halloween glass here. I'm just here for the booze. This is not booze. It's Tuesday morning. This is a nice glass of tea. So before we get started, Dan, you have a shout out?
Hoag's got it.
Yes.
Yeah.
This morning we have Arabia Johnson up over $3,000 trading the NASDAQ.
Mm-hmm.
Good show, Arabia.
Nice.
Quite a few NASDAQ traders are up today.
Yeah. We're getting a little bit of that movement.
Mm-hmm.
Speaking of movement, we want to talk about fall volatility today. Now, there's this old sort of, I guess you could almost call it like an old wives' tale, right? Uh-oh. Someone's at the door, so Roddy's going to bark a little bit. Anyway, the thought is that October especially is known as a month. We're in September now, obviously, where there is sort of this belief that the market tends to go down there. That's not true statistically, right? It just seems that way because during the 29 crash, the 87 crash, there's these huge memorable things that happen in the fall.
Both of which I was there for, by the way.
Yes.
John really remembers that 29 crash.
On the floor, right?
Yeah, you were just out of finishing school.
Yes, that's right.
So it's not supported the down part of it. In fact, I think there's been more crashes or worse performance in September, which we're in now, which makes sense because that's when Lehman happened on a Monday in September, or some other things. But there is more volatility. It's not necessarily that it goes down, but statistically, there is more volatility during October and September than other months. And there's a lot of reasons we could talk about that might be the case. And Hoag, since you've been there from, the sorrows of 1840 and the 1929 crash, I made up that first one, but I wasn't around. Maybe you could tell us a little bit about your experience because you were there for the 87 crash. Tell us about your falls growing up.
Well, in 87, I was a pit clerk. I was a clerk in the S&P as an ARB clerk. Like, people on the phones would flash orders to me. I'd tell the broker what to do. He'd execute. He'd tell me what he did, and I'd report back to him. We were kind of a simple, but sometimes very harrowing and challenging job, especially during the 87 crash. Now, think about the E-mini S&Ps. The E-mini S&Ps trade in quarters, okay?
Mm-hmm.
The S&Ps, the big S&Ps, trade in dimes. Back in 87, it traded in nickels. So there were 20 ticks per handle, per point, if you would, where we're now we're dealing with 4. Those ticks were still $25 a piece. And during the 87 crash, sometimes the bid offer was 10 points, 20 points apart. So that makes your tick from 500 a point to 5,000 or 10,000 a point, 10,000 a tick. I'll never forget it. It started on Friday. We started breaking. There was rumors that there was a guy by the name of Proctor who was saying it was probably going to bleed into Monday, which it did. But to keep things in perspective, the Dow dropped 504 points the entire crash. We had bigger days.
That's like a quiet day now.
Yeah, we had bigger days last March.
Well, I think an important thing to remember is what was the Dow at the time?
It was
down 500.
I was at 1,200 at that time.
Yeah,
yeah, something not too far off. I mean, that was a scary time, obviously.
Didn't sleep all weekend.
So what are some reasons we think that we see volatility pick up now, and sort of how traders can use that to their advantage? Dan, I know you have some thoughts about why this occurs.
Absolutely. Well, we're all getting off of summer, right? If we look back at kind of the history of our industry, institutional guys, they're kind of out in the summer. They shut down on Mondays. They're not trading Fridays. They're escaping for the weekends. Then you've got Europe going on vacation all of August, or holiday, as they like to say. So everyone's kind of getting back into school. Like, it's that concept of back to school right now. Everyone's getting back into the swing of things. Everybody's trying to get a little bit more active. And I think a lot of people start to look at, hey, I didn't do much this whole Q3, tail end of Q2. I have to ramp things up going into Q4. I need to, increase my profits. I want to have a bigger year. So people are willing to take on more risk as you get closer to the end of the year, because maybe you're trying to match numbers from last year. You have quotas you're trying to hit because you didn't do a lot the last few months. So instead of trading 1s and 2s, you're moving to 4s and 6s. And so your strategy is changing, and you're going to take a little bit more heat to try and overcome what you just let go over the winter or over the summer.
And this, I certainly remember, is when you're trading at a shop, you're obviously keeping track of your performance very closely throughout the year, but that year number, that's kind of how traders are known. That person's an X and X per year trader. It's usually not month or day or things like that.
Yep.
And you're right. I remember that pressure of, is these next few months are going to make or break my year. It's time to push it. I know that there's probably going to be lower volatility once we get to December. So if I'm going to push, I got to push now, which is not necessarily the healthiest attitude to bring to the markets. MP, thoughts?
Yeah, my thoughts are, excuse me, was in 2008, I remember fall came around and I was having my best year. I was going to call it a year right before October. In September. In September, I had great volatility. And I about called it a year because I hit my goal for the year. And I was one of those that if I pushed it, I would cut my year in half as far as goal wise. So I was just chipping away. Starting in January, everybody knows the P&L on what you're taking home starts all over, and you're building your annual salary. So that was the time where I about took it off, and I did not. And I had my best month ever in October 2008. And it was one that I wouldn't say it was easy, but there's a lot of movement. And what happened in the pit was a lot of opportunity, tons of opportunities. It was really hard on the screen because it was so thin, so wide, but the pit would have these resting orders that would sit out there. And it was kind of, I want to say picking things off, but it was moving. And I've always had a great time in fall. I get excited. Everybody comes back from, like Danny said, the holiday or the Hamptons or wherever. And the kids are back in school and they're putting money to place, or the big institutions are readjusting portfolios and whatnot to kind of protect themselves towards the end of the year, which is moving money, which is going to cause volatility. So I always enjoyed fall.
Yeah. I think something that's interesting now, as we've talked about this on past episodes, on a pretty epic, unparalleled as far as I've seen, kind of grind upwards with kind of very little. I think I saw somewhere, it's been ever so long since we've had a 5% pullback in the market, right? And I guess the question I have for you guys right now is, can you have a volatility event when everybody's already expecting it, or does it have to be unexpected? Because we're in this weird market state now where everybody is on it. Like, if this stuff crashed tomorrow, I don't think we could say that many people would be like, well, never saw this coming. This was not on my mind at all.
I think everyone's sitting here waiting for some sort of volatility and the markets just crash. But the second it does, everyone's going to be chasing. Everyone's going to be in shock. Oh, I didn't see it coming like this. I thought it would be something else. There's going to be something. Like, no one's going to predict the day it's going to happen. So the second it does happen, everyone's going to be like, well, that's not how it was supposed to work out. It should have done something else. Was not expecting this one. I think that's what's going to happen. I think it's
Dad always said it always looks the best at the top and the worst at the bottom. When this thing is going to crack is when everybody gives up on waiting for it to crack.
Yeah.
They were actually talking about it today on Bloomberg about where's the 5% pullback. It's been the longest run, second longest run ever of not having that pullback. And then they were talking about, so when they do have a 5% pullback and everybody's like, well, get into it. It's like, what's going to happen if it keeps going? And then people, because everybody's been buying that pullback that has happened is what they're talking. And they've been getting paid. They've been getting paid really well.
Yeah. Do you guys get the impression that people are overextended right now? I just don't feel the same sort of mania that I wasn't really a trader during the .com crash. I was 13. But it seems that every story I hear about it, there was this sort of this unbridled frothing enthusiasm that like the entire economy's changed. This is the new thing, you know, the Dow 50,000 or whatever by the end of 2002. I don't know if I feel that in certain assets. You do. You got like, you know, the crypto crew.
Jack, it wasn't enthusiasm. It was irrational exuberance, right?
Yes,
remember that one. And then after he said it, it melted up so hard. Because I remember like, when did he? Because I was looking at him like we were in that time. I think we're in that time, but I don't know how much writings on the wall like there was back then, or even in 2008. I keep thinking when you shove $6 trillion into the economy, all assets rise.
Yeah. Well, are you guys familiar with Tina? There is no alternative to stocks. That is, I think, what we're seeing right now is nowadays in the current market with the index funds and stuff like that, we have tons of every 2 weeks passive money flowing in. And what else do you put it in? Bonds are yielding nothing.
I think we all make a trip to Sotheby's art, John. I think we should start.
A lot of guys went to Switzerland after the 87 crash.
Yeah. To what, have a strudel or something? Or
no, they stacked their cash in Swiss banks.
Yes. Oh, that's some crafty stuff there. Yeah, so like that's the thing that I don't feel though. Like on one hand, it seems that people are just letting this grind higher. I don't know. Like I wouldn't. No one wants to short it.
So I think we had a lot of people. We had the excitement start to show when the whole meme stock started happening. Everyone was kind of getting involved. You're downloading Robinhood. You're buying any stocks you can. You're buying little bits and pieces here and there. But the excitement was around the meme. And then there's a whole new mentality that we didn't have in 87. And that's this concept of to the moon, where like people don't want to sell the retail side. And we're seeing more interest in retail than probably this industry's ever seen. So retail's holding a little bit stronger, which is why I don't think we're seeing the sell-off, because it's still this mentality of to the moon. I'm going to hold on to it to the moon. It's going to go to the moon. It's going to go to the moon. And eventually someone's going to finally say, moon's not happening.
Until they're all in. Once they're all in and there's nobody left to buy it, that's when everybody looks around and goes, uh-oh. But I'm waiting for my 22-year-old son to start asking me what stocks to buy. Because then I'm pretty sure it's going to be over.
Never go all in.
My Uber driver was asking me the other day.
Oh, hold on. Your Uber driver?
Yep.
Well, that's when they say you got to do the other thing. You got to get out, or you got to do the opposite.
When everybody's in, it's over.
Well, you always got to keep some dry powder, right? You never want to be all in. That's a vulnerable place to be.
Right? Yes.
You know, don't.
So the credit, Jack, the credit issue, there's nothing there like it was in 2008. John, again, what triggered it in 1904?
It was, the shooting of Archduke Franz Ferdinand.
There was actually a crash started in the orange juice pit in New York because a broker asked a clerk to get him some orange juice. The clerk came back and whispered in his ear, and he said, "The orange juice is frozen." And somebody heard somebody say that, and it went around the pit. And by the end of the day, orange juice was limit up.
Nice.
You never know what.
So do you ever get his Tropicana, John?
Yes. It tastes funny without the vodka, but
yeah. So I mean, 2008. Looking back at it, that started boiling up because the toxic assets are what they called it. But before it was just defaulting, wasn't it? Starting to default.
The mortgage-based securities and all
Stated
of
income,
those
stated taxes was where you could get a mortgage, and then people were flipping homes and got caught on all that. But I don't see credit being an issue.
Well, there's never a credit issue until there is, right? It's not something that we usually like slowly see building. I guess that's something that's always on the back burner, but right now I just sense this level of sort of complacency with what's going on. I was going to make a Simpsons reference. I don't know how many people out there are Simpsons people, but where Mr. Burns goes to his checkup with the doctor, right? And they showed a Three Stooges thing where all the diseases are trying to get through the door at once, but he can't get sick because they block each other. That's what's happening right now with the market, right? We got 400 things happening, but every time one sector clean energy solutions right now burst a bubble, and other one picks it up. Like there's all this rotation between things, but the net effect is just these indices just grinded higher. So
is there smoke going on right now with last week's unemployment? Is there tapering that there is going to be happening? So all this stuff should.
Yeah, I mean the unemployment numbers increasingly they're so unmoored from reality. It's just very hard to make heads or tails of them because they bounce around. I never remember having unemployment constantly missed by 500,000 or something like that, but that's just what happens now. It's difficult to measure, and I think you just got to take sort of the aggregate, like a trailing average, to get the picture.
And I think we're going to see big changes in that number too, with these unemployment benefits that are getting taken back after this weekend. We may see some big changes in job numbers because this is one of the first times in history there's more jobs out there than people technically looking. So we may see some balancing in those numbers come the first month of October, or first Friday of October. There may be a change there. So I'm looking forward to seeing how those numbers are going to change. If those aren't changing with everything going on with this unemployment stuff, that may be a trigger to send things lower. Who knows?
Well, or they'll have to pay more money, right? In honor, we're just coming off of Labor Day. That's the other option. I do like there's something can always get filled at the right price, but then you got to worry about looking at the inflation stuff. So I'll be keeping an eye on changes in wage.
What got canceled? Gigs and self-employed? Is that pretty much the unemployed or the stimulus stuff?
The extra $300 a week for those that were on unemployment, that's going away. So you'd still get unemployment. You're just going to be earning less or getting less.
Okay. So, I mean, is there a vote here on volatility, or is it just a quiet melt up?
Well, that's what I was going to ask before we head out today. I was going to say, is the S&P going to hit 5,000 or 4,000 first? Right now, we are at 45.25 is what I got.
4,000.
So what do we think? Who wants to go on a limb? We're right in the middle right now.
I'm going 4,000 first.
4,000.
4,000.
I agree.
And I am the perma bull, just so everyone's clear here. And I am pessimistic.
You want the market to rally, just tell Dan to take a day off.
All right, MP, you have two options right here. You either take 5,000 or you pick 4,000, which guarantees it'll hit 5,000 first with all four.
I've been saying it's sell it off for the last year and a half, so that's been dead wrong. So it's when you flip and change that there's no more. What is John? No more sell or no more buyers. So I'm saying 5,000. The trend is your friend. And let's just keep it that way going into the year. And it might even stay quiet for all we know, because it does whatever you don't expect it to do.
It's the pain machine, baby.
It'll make sure pain machine or pain, yes.
Pain. At a certain point, it all becomes the same feeling, right? So anyway, with that, Dan, I believe you have a quote to send us off into the abyss.
Into the fourth quarter. I have a fourth quarter quote here for us, coming from Dallas Cowboy owner Jerry Jones. Everybody's pretty good in the first quarter. Second quarter, you get a little bump or two coming into the half. By the time the third quarter comes around, you're tired and you're laboring. When it comes to the fourth quarter, it calls on character.
Yeah.
All right.
Watching the Northwestern football game this weekend, they did not seem like the first quarter or second quarter was easy. It was a pretty lame effort. So we'll see if we get that to run. Well, Dan, that's a good place to leave it. And the Hogue, what should people keep in their minds this week? What sort of wisdom do you have to send us off?
Well, you can come to Futures 401, 101 through 401 starting today, 12:30. Got a lot of people signed up for it. Looking forward to having a good time. We kind of go over a lot of the basics, the history of futures, contracts, trading platform, cardinal rules of trading. Those are all the ones we're going to be talking about this week. Looking forward to seeing everybody there.
Yeah, Tuesday through Friday this week, and then Monday through Thursday the next 3 weeks. This is our sort of beta test of running this program, but it's a lot of instruction with the pros, so you might want to check it out.
Is this like a Harvard education, less the cost?
More like a University of Phoenix, the Harvard of the online university.
All right. Okay. And this 101, this is 101, which is like beginner, 201, which is like, all right, we're getting a little bit more into this. 301 is like, we're learning like the details. 401, you're ready to graduate.
By the end of 401, you should be ready to put together a good, simple strategy, a good trading plan.
For all those out there, futures is one of the best products to trade or asset class to trade. John's going to be talking about it from the very beginning, dropping corn off at the streets of Chicago Board of Trade, or maybe even
I remember
sooner.
those days.
Yeah. Yeah.
All right.
All the way to where we are now.
Yeah. So check that out if you get a chance. Maybe we can dump we'll get you the link if you don't have it. Just contact one of us. And that's where we leave for this week. We'll be back next Tuesday, I believe, with a new episode. In the meantime, go out there, trade well, be careful, keep some dry powder.